Hi everybody, my name is Simon Hunter and I head up the business banking sales team here in global markets within CBA. Joining me today is Stephen Halmarick, our chief economist. And with everything that's gone on with the market in the last couple of weeks off the back of the RBA move, the first move in interest rates since November 2010, we thought it'd be a great time to come back on some customer queries that we've been receiving. Now Stephen, we've seen the rate rise. There's been a lot of rhetoric, talk of rates of 4-5%. From your perspective, where do you see rates going and what should be the insights that clients take away at this stage?
So our view is that we will see a number of interest rate rises from the Reserve Bank, but that the official cash rate target will peak at a pretty low level. So we're picking 1.6% in early 2023 for the peak in the cash rate target. Remembering it's now 0.35%. That's a lot lower than what's priced into markets. Markets expecting 3.5-4% peak in the cash rate target. So we think this rate hike cycle will be pretty shallow and that every increase in interest rates is going to have a relatively significant impact on the economy, and therefore the Reserve Bank won't need to do as much as what markets are expecting.
And in terms of that pace of move, the talks of 0.5% moves, even a 1% move at any given time, what's your thoughts on the pace of that rising?
Well, when the Reserve Bank raised rates in early May, they described the 25 basis point move as business as usual. That's the type of rate rise you would have expected, pre-COVID. So we are expecting a series of 25 basis point increases, June, July, August this year, and November this year, and then a final move in February 2023. So general expectation is 25 basis points at a time as the RBA gets towards where they want to be.
Thanks, Stephen. And listen, while we've got you, more broadly on the Australian economy, what's going on out there and what do you think people should be paying attention to?
Well, I think it's important to remember that the interest rate rises are in the context of an economy that's actually doing very well. We're expecting GDP growth this year of 4.7%. That's a lot stronger than the economy was performing pre-COVID. The unemployment rate is expected to move down to 3.8% in coming months. That's actually going to be the lowest unemployment rate since the early 1970s. So very strong labour market. And if we look at our Commonwealth Bank credit and debit card spending data, we can see spending in the overall economy remains quite strong as well. So the higher interest rates are coming in the context of economy that's doing very well.
Brilliant. Listen, thanks for your time, Stephen, today. Really insightful, hopefully beneficial for our clients, and thank everybody for joining us today. Thank you.